Hello, Mario?
Hi, Rafi.
Hi.
Hi.
Uh, Okay, I'm just setting things up here.
That's okay. We're live already, but it doesn't matter anyway.
Okay.
Oh, there we go. So
Let me try and get the light out.
that's okay.
Uh,
So good afternoon, everyone, or good morning. It's Thursday, February 11th, 2021. Exactly a week ago, Rafi and I did another live stream. I think we did it a little later on. The whole silver squeeze thing was happening. Silver's calmed down, but Rafi has been riding, and I've been talking as well, uh, not just the last few months, but the last year and a half, that commodities were really undervalued, and that they were a signal that the dollar was going to come down as well, and that's happened. And I found out about Rafi back in October, November, reading some of his articles. His articles are free on Seeking Alpha under Astrolib. He also has a paid subscription service called Endgame Investor. I highly recommend that. He writes some very interesting pieces there about trading, about investing, about the psychological aspect of trading. And I wanted to talk to Rafi again today, and he was nice enough to want to do that, and especially about commodities. Rafi, what are you seeing in the commodities markets?
well, first of all, it's my pleasure to talk to you. I wanted to talk to you also.
Great, yeah.
So what am I seeing in the commodities markets? I'm seeing some very worrying signs if you are not protected against a very fast inflation. Well, we can start out with the technical picture. I don't have it in front of me.
I've got your stuff here if you don't mind me sharing it with the viewers.
Oh, sure.
Do you want to look at the what you wrote yesterday about the tightness in gold and commodities breakout and stuff? Should we do
Sure.
that? Okay, let me share that. Let's do that. Share.
Actually, the latest article that I published was yesterday. I think it was the #1 trending article on Seeking Alpha.
So here it is. That's the one? Can you see
Oh
it?
no, this is part of my paid service. But yeah, you can show it. It's all right.
Yeah. So should I? This is the gold price here. Do you want to talk about that a little bit?
Right. So I noticed that that the 1850 zone appears to be something of a pivot, a war between the bullion banks, it looks like, and the speculators on the other side. I think the other reportables are the ones picking up all the dips, or most of them. But the reason 1850 it's not just some random number besides being psychologically important. It's between 1800 and 1900. But if you look at the options tables on the COMEX, there's a huge number of contracts. I forgot how many, maybe 11,000 or something, that are open on the 1850 strike, and those contracts expire in the next few days. I don't know exactly the date. Sometime in the middle of February they expire. And if
I think it's the third Friday of the month usually.
Okay, so that's what, like a week and a half?
It could be next Friday, yeah.
Right, yeah. So about 8 days. So in 8 days, those contracts expire. So if the ones who sell those contracts are the bullion banks, like J.P. Morgan, Morgan Stanley, they sell those contracts, and if they expire out of the money, meaning gold isn't worth 1850, then they just keep the premiums on those contracts they call.
Yeah.
But if they expire in the money, meaning gold is above 1850, then those contracts are going to be exercised, and the banks are going to be on the hook for whatever, 11,000 times 100 ounces of so that's a 1.1 million ounces or something like that of gold that they're going to have to deliver. And some will settle for cash, but a lot of the times what happens is that these contracts are exercised, and then they get the warrants in the COMEX or wherever they're stored, and they go in and they sell them quickly for a profit, and they pocket the difference. It depends how they do it. So after contracts expiration, sometimes when you have those arbitrage people coming in and selling what they got after exercise. You see a strong dip because there's a wave of selling, try to lock in those premiums. So the bullion banks have a real financial interest in keeping gold below 1850 for the next 8 days. If they can do that, then the selling pressure on that level should abate, and we should start heading higher. Because you're seeing that there's a big triangle on that technical picture there from August to now, and the price keeps going up and down in a tighter range, which means
Those are the
Yeah.
1850 calls there, the strike, open interest. Yeah.
Right. I don't know what the open interest is today. It's probably changed.
Yeah.
But this is really a minor point. What's happening is the backwardations in commodities are spreading. We just saw backwardation in platinum a few days ago, maybe 2 days ago. I don't know if it's still there, but the backwardation in copper is pretty solid now, going all the way from the top of the table to the bottom of it, from spot to all the way to 2025. It's backwardated, and which is very strange now because there are so many lockdowns all over the world. You would expect the demand for copper to be down because there's less building and less industrial demand. But that's not what's happening. There's hoarding, and different countries are storing copper and just trying to get out of dollars. It's a way to get out of dollars, is to hold real stuff that you need later. This is what countries are doing now.
Yes. Sorry, I saw copper reached an 8-year high the other day, didn't it?
Yes, it did. I think 380. I think the all-time high was 2008, like $4 and some, 430 maybe, 440.
Yeah. I thought this chart was interesting that you did. You compared CRB versus gold, and even though gold has outperformed, since October, it's on an upward trend. It looks like we are near like a trend line, so we should start seeing gold maybe to perform a little better relative to commodities.
Yeah, this upward trend line has been in place since was October 2018, October 2018, October 2019, October 2018. Once the trend line gets tested, we could go a little bit lower. This is gold compared with commodities generally. Yeah. And we had a huge jump up. I mean, this chart is it's instructive because specifically it topped in March, right, when everything was selling off and gold was crashing to 1450. And gold investors were in a panic, as were everyone else. But if you compare what was happening in the price of gold to the price of everything else, gold was skyrocketing at that point, because gold was falling, but everything else was falling much faster. I remember oil went to like -35.
38. Yeah, and I also, looking in the longer term charts, gold has done a lot better since the end of 2015 than commodities. So commodities are just catching up, I think. So let's look. You said you wanted to show also. Is it the silver shortage article that you're talking about?
Yeah, that one actually got a big audience. I think it's up to 50,000 views already.
Okay, do you want to talk about that one a little bit to the viewers? Let me.
Yeah. So the point I made here is to try to understand. I mean, silver investors and gold investors, we complain about manipulation a lot, and not without reason. I mean, it does happen, but the question, it doesn't really help much to say just blame J.P. Morgan and cry over spilled milk. I mean, we might be justified, but it's not going to help us. So it's best to try to understand what is actually going on here and why it's even possible in the first place to supposedly manipulate the paper price of gold and silver. Like, because you don't see a manipulation really in the price of wheat or soybeans or things like that, consumable commodities like this. And so I asked the question, why is it that gold and silver can be manipulated, but those can't? So the answer is that banks can't really manipulate the price of soybeans and wheat because there's only one kind of demand for those things, and that's to eat them. If that if JP Morgan, for example, were to sell short futures in soybeans and just try to knock the price down, what you would have is famines and shortages of food, especially in the poorest areas of the world. When the market forces prices down below the market clearing price, you end up with shortages. So with gold and silver, though, it's a much different story, because in gold and silver, you have industrial demand, right? For whatever gold and silver is used for. And I include jewelry in that because it's not used as money. Jewelry is not money, it's decoration. It can be melted down into money, but that's a different story. So in industrial demand, when the price goes higher, consumption adjusts to that price, and you lower the consumption in that good, and then you have a new market clearing price. But with monetary demand, it's a very different story. So the paper price of gold and silver is priced right now for basically fairly smooth industrial demand, which ebbs up and down and flows, in smooth curves. But monetary demand is different, because when suddenly the faith in the dollar is tested, and people say, we're scared of this paper currency, we need a store of value, then the demand for silver as money can suddenly skyrocket, right? It's not like wheat, where the demand for wheat can suddenly skyrocket because people generally eat the same amount of food every day. It doesn't happen like that. So with monetary demand, when it suddenly skyrockets like this, then what you have is a shortage of silver, because suddenly you have all these buyers coming in to buy coins that weren't there before. And then you have a physical shortage in the silver market, and you have high physical premiums on silver coins. And then you ask the question, okay, so then why not just let the paper price go up and alleviate the shortage? So the answer is, in consumable commodities, that would work, right? Higher prices are the cure for higher prices. Except in a monetary commodity, it's different, because monetary demand is it's much more dangerous. It has to do with the lack of faith in the dollar. So if monetary demand goes up, and what causes monetary demand for monetary stores of value like gold and silver is the fact that the price is going up. And even though people might not consciously admit that gold and silver are money, it's been money for 5,000 years for a reason. And much like evolutionary psychology, we have instincts, social instincts, or instincts to eat, instincts to run a fight or flight response, things that just are part of our evolutionary history. So is gold and silver as money. It's just programmed in there to run to gold and silver when things are when there are problems in the monetary unit. So if they allow the paper price to match the physical price without trying to keep it steady, then the monetary demand for gold and silver can just keep going up and up and up, and it's a potential positive feedback loop where it doesn't stop. So in 1980, the way that Paul Volcker stopped this, the then Fed chair Paul Volcker stopped this, is he increased interest rates on the dollar, which encourages people to hold dollars because you get interest on those dollars. So
yeah, went up to 20%. He let it go to.
Right. So that is a way to save the dollar. And if interest rates are pushed up to that level, it would probably save the dollar, but it would destroy the entire banking system and leave debtors, bankrupt.
Well, the entire economy would be gone because there's so much debt now, isn't there?
Yeah, it would be an economic holocaust.
Yeah. Just one question here from the viewer, and if you don't mind, I'll answer it. It's Miles asks, who is the actual person setting spot price? How do you derive the price? Well, the spot price is just set in the market, mainly by bullion banks. Gold and silver are traded in the foreign exchange market. Their symbol for gold is XAU, for silver is XAG, and it also trades in the futures. So it's a mixture. It's set by buyer and sellers in the interbank foreign exchange market, and also in the futures market. So that's how the spot price is set.
Mhm. Yeah, it's in the marketplace. So when bullion banks supply these contracts, if they supply more contracts, the spot price will be suppressed, and that's okay for industrial demand, but for monetary demand, there's going to be shortages, and that's what's happening now. So what this is causing is a backwardation in silver, slight so far. I don't know if it's deepened today. But every time there's been backwardation in silver since 2011, the price has skyrocketed within months.
Oh, here's the chart here. Yeah,
Right.
there you go.
So here I pointed out all the backwardations in silver since 2011. And the one that looks most similar to the one that's happening now is the one in 2011 where it went from, I think, $27, around where it is now, to just under $50. So it's not going to be an exact replica, but from what I've seen and from what I've seen in the history of the silver market, we're on the cusp of the price breaking, and it's 1850 could do it on gold, 1900 could do it on gold, but it's coming.
Yeah, and one thing you said about backwardation and what's happening also in the premiums is that even if the bullion banks keep trying to sell the front month future to keep the price down, the paper price, people are going to stand to take delivery of the silver and try to sell it, in the retail market for a higher price. So they're having a really tough time driving the price lower because people are standing for delivery, right? So the title of the live stream is like the nascent commodity bull market, and I wanted to show the viewers and Rafi as well a few things that I've seen here. Let's have a look. Trying to find it. Okay.
And you could alternatively call a commodity bull market, especially in this environment where the economy is shut down, really a dollar bear market.
Yeah, that's right. I wanted to show you. Hold on. I'm still getting used to doing this. So hold on. So it looks like it's not just us, but even one of the the biggest of all bullion banks, as you can see here, Kolonovich, a new commodity super cycle has begun. So he's an analyst for JP Morgan. So and he goes over this super cycle, 12 years. And I've been speaking about the CRB, how it started really moving up here in 2003 and 4, as you can see there. It tested the high there, and then it was really here that it started picking up. After the '08 crisis, it dumped like gold and silver did. Gold and silver, though, made new highs, which is strange. I think it was more the monetary effect. But the commodities, that was a bad sign because they didn't really match the '08 highs, and it's been in a bear market ever since. But he sees it picking up now. And I wanted to show another chart here. So first of all, I want to show the dollar index, because like you said, if commodities are going up as they're priced in US dollars, consequently the dollar has to go down. So I've got this chart of the dollar index. It's a monthly chart. It goes back all the way to the beginning, but I'm going to only take it from like the late 90s. As you can see here, right around the time the CRB or commodities started going up, look what the dollar started doing, started dropping all the way down, and it bottomed in 2008. And that maybe should have been a signal. And that was a signal that commodities had topped. But gold and silver, surprisingly, of course, because gold was at 1,000 at that time, and I think silver was around 25 or something. They continue to go up, and they actually made new highs. And that's why I think gold and silver are really bullish, because despite the fact that the dollars kept going up, they're a lot higher than they were in '08, and the general commodities are catching up. So now I'm going to show the CRB
index. Can you show the CRB in gold terms?
I haven't done that one. No.
Yeah, you could probably.
Yeah. Let me
Oh,
just.
I think that was the chart that I showed
Yeah.
on my yeah.
Yeah. That's right. Let me share the this one
That
here.
that wasn't long term though. I'm pretty sure that if you look at the CRB commodity index in gold
Yeah.
terms, it's been heading down continuously, which makes logical sense because we have more technology and better organization to extract more commodities from the earth than we did before. So the supply of commodities should go up faster than the population, and
Yeah.
commodities should go down. So what the CRB is really showing is the volatility in the purchasing power of the dollar itself.
Yeah, but if you see here the bot, if you look here in the late 90s, there's a double top in the CRB around 200. Then it bottomed here in 2002, beginning of 2002, and then it started going up, and it looks a lot like now. You see that move here and that move here, and the tops here and the tops there. And I think we're just about to, once we break out this 208 level, we might see a retest of the breakout, but that will be further along the road. And then after the retest, I think we're going to see the same kind of move. And I mean, I would expect us to at least match this level here, if not go even be higher than this, because we're inflating the system so much. We have been since like around here, since '08. So what do you think?
I think, and I don't really want to think this, but I think that once commodities reach a certain level, and there's no room to deflate them anymore, because every time the commodity index reaches some kind of peak, we're already seeing in the CPI and the government, even in the manipulated government inflation measures, we're seeing worrying numbers. And that's really what caused the crash of 2008, was that inflation, price inflation as measured by the government liars, was becoming a bit problematic. So even they stopped the printing presses for a while just to calm it down. And that's what, and then all the leverage that was in place from the housing bubble, that's when it collapsed, because they'd stopped the printing presses for a little bit. But now there's no way they can stop it. There's nothing they can do. If they try to stop the printing presses now, the amount of debt that would default is just so enormous that they're going to sacrifice the dollar, and the CRB index will just, potentially rise to infinity in dollar terms. I mean, that's the end of the currency system as we know it, and that there's a serious potential for that, and that's what you really have to protect yourself against.
Yeah, I think the bankers right now, people like Mr. Kolonovich from JP Morgan, they're seeing this more as a reflation trade, that the economies are going to pick up and everything's going to be, Goldilocks like it was in the 2000s. But I agree with you. It's not that certain. If anything, I think it will be difficult for them to control it. I think you mentioned yesterday or the day before, because Janet Yellen, she said pretty much the same thing Ben Bernanke said a few years ago when someone asked him, what if inflation picks up? And he said, oh, we can just raise rates in 15 minutes and we can stop inflation. And I thought at the time, Bernanke was like being really not very honest with people. And it looks like Yellen has done the same thing. Can you go over what she said?
I mean, there's nothing really to say about what she said. I mean, I ask myself, does anybody actually believe what she's saying? Does she believe what she's saying? Why does this all sound like, some kind of Russian kangaroo court interview, or whatever it is, that nobody asks any serious questions, because of course they won't be answered. But it just seems like this pathetic play between Yellen and her supposed interlocutors, that they both have these scripts and they're there to like placate us. But who really believes that they're going to raise interest rates on what? On $25 trillion in debt? Are you crazy?
Yeah.
This isn't even believable in the slightest.
Yeah, and the other thing as well, once people start losing confidence in the currency and prices start going up, it's very hard to put the genie back in the box. They can't just say, oh, okay, everyone, stop raising prices. We're going to do this. And the other point I would make is in the late 50s and towards the early 70s, there was a massive, at the time, gold was fixed, of course, at 35 under the Bretton Woods rule. But the US is running major deficits, trade deficits, current account deficits, which and also budget deficits, which meant they were overprinting the dollar. And I think the CPI, or prices, only started rising and showing inflation in the early to mid 70s. So it took almost a decade for prices to show up. And they've been, even though I know they manipulate the CPI, because if Jay Powell really wanted 2% CPI, or inflation as he calls it, he could just switch back to the way they calculated CPI in 1980 according to shadow stats. That's near 10%. Then he'd have to raise rates. I think it's the big lie, the CPI, but they need the big lie in order to keep inflating. So what I think they're going to do, because JP Morgan's Jamie Dimon met with Joe Biden the other day, and I don't know if Yellen was there, Secretary of the Treasury, but I think they know that the inflation's coming, the rising prices are coming, the food prices are already rising. I think there's something on King World News about food prices. They're going to probably make it even worse, because they're going to say, oh, we need to do more stimulus to help the general public because prices are going to go up. But by doing that, it's going to be a snowball effect. Like the Austrians always talk about that, Austrian School of Economics, that if you give the public fiscal spending to cover inflation, you create even more inflation. So I think they're going to do, the BLS and the government and the Fed, they're going to work really hard to keep the indicators of prices, or inflation as they call it, as low as possible. And the people who are really going to get hurt are the people that they're saying that they're going to help. And the people that are going to benefit, of course, are the very wealthy, because they can protect themselves, and hopefully us, because we can see this coming.
Well, yeah, that's one thing I will say about this unique period in history. It's not unique in the sense that we are on the cusp of hyperinflation. Every single paper currency system in the world has ended this way. And the US dollar is not going to be an exception. I can guarantee you that 100%. The timing, I don't know exactly, but it's close. But what is different about this time is that I don't think that there's been a group of people, and we're small and we're not a majority, but we are an irate minority that understand what's going on, because we still have freedom of information. I can still talk to you. We still have good communication, and there hasn't been like a good group of people that understand it to this extent, that they're going to protect themselves, even though we're not rich. I'm not rich. Most of us are not rich, super rich people. But we're prepared for this as much as we can be. And when it happens, hopefully we'll be part of that transfer of wealth, and then we will have the power. And and I'm using that, I don't like that word power, but we'll have the ability to save our families, our inner circles, and we can be in control of a lot of our destiny, and help lead the world out of this, because in past hyperinflations, nobody understood what was going on. There wasn't any economic education. There wasn't any communication between people in large swaths of the planet. But we do have that now. So thank God. But and if we didn't, we're in the biggest hyperinflation in the history of the world right now. We're going to need it. We're going to need those people to help.
I read that the guy who ran the Reichsbank, I think von Rudolf Havenstein, and like his advisors, they thought the problem was that the reason prices were rising so fast in Germany was because they were not creating enough money. I mean, it was crazy back then. The guys who were running the show, yes, I remember in '08 when the system was imploding. I was sitting at my desk at work, still in the city, working as a broker, and I was watching and I was quite happy to see J.P. Morgan and Goldman Sachs stock plummet. And I thought, well, this is over. But then they saved everything. And yes, I was able to work for another 4 years in the city after that. So that wasn't a bad thing. But deep down, I thought, this system doesn't deserve to be saved. But I don't think there was as much social media at the time. I used to write a few articles I had a website called forsoundmoney.com, but very little interest in what we talk about now. But nowadays, it's encouraging that young people are getting interested in this. Back then, '08, and even before that, when I started looking at the gold and the monetary system, very few people looked into that. It's becoming more and more, divulged. And I think, yeah, it feels a little bit like sometimes you're I don't know, it feels hopeless, but I think it's important that we educate people or inform people. I don't like to well, maybe educators, right? About sound money, about fair exchange of real goods, of real value, because what we have now is really not fair. We don't have really sound money. It's dishonest money. And I think we're going to have to learn that we don't need big government to thrive. And that's one of the big lessons as well. Hopefully that we will be able to inform people that small government, sound money, honesty, really, a bit more honesty. I know there's always going to be dishonest people. And I'm not saying I haven't lied in the past, when I was a kid or everything. We all do wrong things, but to try to have more, how can I say, honesty in the system. So we've got another super chat here. You've done a video in the past on how much silver each person would need to fare well. Does this remain the same? Like 55? I'm not sure what he means by the 55, but I think, was it 60 ounces you needed to have of silver if you wanted to be in the top 1%? I'm not sure. Have you got any views on that, Rafi?
Well, I would say what you can do is, estimate how much food you need for you and your family, and then go to like a price guide in the 1920s, 1930s, when coins were actually silver and you bought milk with a dime or whatever it was.
Or even up to 1964.
Yeah, 1964. I would go even earlier than that, because in 1964 there was also credit and there was paper money that wasn't backed, and the early, late 19th century, stuff like that, early 20th century would probably be more accurate. Figure out what the prices of food were back then, and each dollar was what, 0.9 ounces of silver or something like that. Then you could do the calculation.
0.77.
0.77. Okay, sorry.
Yeah.
So 0.77 ounces of silver. So multiply the expenses in food for a family in the 1910s, 1920s by ounces of silver, and you'll know how much ounces of silver generally you'll need for your family or for whoever needs it, and just store it in your house or somewhere, in your attic, in a safe, wherever, and don't tell anybody. I just made a big order of physical silver for a bunch of guys in my social circle. And I told them, look, if you want to get in, now's the time, because the thing is about to break and we got to do it now. So yeah, hopefully that'll go in the next few weeks. And yeah, that's really the monetary priority, besides being armed, for emergencies, for defensive purposes, and having monetary silver. You're halfway there, hopefully.
Yeah, I bought maybe 6 weeks ago, a couple of months ago, from my coin dealer. This is a Morgan dollar. So yeah, that's That's not an ounce of silver. It's 0.77 the dollar. Yeah, a lot of people think that the silver dollar is an ounce, but the silver eagles are an ounce. But the circulating dollar used to be is 0.77. I think I paid 20 pounds for that. And when you buy coins like that from the coin dealer here in the UK, you don't pay VAT. So that's a good way for my UK viewers. And I got some also peace dollars. I think they came out in 1921, 22. For some reason, the US Mint stopped minting the silver dollars. So I think sometime in the early 1900s, and then they started again after World War One. They call it the peace dollar. So yeah, they call that also junk silver. What else? Anything you should we just look at some questions right now? See what
Sure.
people. Let's have a look. Yeah. So guys, if you want to ask any questions to Rafi and to me, yeah, put it on the message board. So I believe here. Don't forget that silver will fly to the week. Just waiting. Next COMEX delivery date. That's the other thing I was thinking about.
Yeah, that's Thursday the 25th, I think, on silver.
Yeah, and the other thing as well, I think it's going to be interesting as well to look at the commitment of trader report that comes out this Friday, just to see. I have a feeling the commercials, the bullion banks are short covering. That would be interesting. But Butch Mitchell is asking, what do you think is undervalued right now, besides silver?
Besides silver, what is undervalued? Yeah, precious metal stocks.
Yeah.
Oil stocks will probably be pretty good also. Russian stocks I'm favorable towards because Russia has a relatively sound money system. I wouldn't call the ruble sound, but Russian gold reserves have increased pretty much in lockstep with the money supply for the last 10 years. So Russia is going to seriously benefit from the collapse of the dollar, and also emerging markets. Emerging markets are going to benefit from a falling dollar because their debts are going to go down, and there's going to be a lot of divestment from the United States and a lot of investment in these emerging market currencies and industries.
Yeah, and I think Russia has very small national debt as well, the government. Yeah. It's strange that Russia's been buying a lot of gold, and like you said, it's matching the growth in the money supply, yet the ruble seems to be a currency that it's not very sound. It's weird. Do you think that's more of a political thing?
Well, I wouldn't. I think what's going on there, I haven't thought about this issue that much, but I don't think that that currency traders trust the Putin administration, and I understand why. I mean, I wouldn't trust Putin either. So, I mean, really, he's really in charge of everything. So if he wants to just steal the gold from the Russian central bank and like run away to some Pacific island, he can do it. Yeah. If everything's falling apart. So it's really a lack of the ruble. The ruble falling is really a lack of confidence in the Russian political system for a good reason. But Russian companies, they would also suffer from that. It's not that it's riskless; it's not riskless. But if you're a stock investor, if you want to invest in equities, emerging markets in Russia are probably better than the UK or the US or Western countries like that.
Yeah, someone's asking here about platinum and palladium. I know you've got a view on platinum. Have you got a view on palladium?
Palladium, I don't really know much about, but I can say one interesting thing about platinum that I did learn from one of my subscribers. Actually, he sent me an article that was basically the periodic table, and then they narrowed down to which elements on this table, all the way from hydrogen to whatever the last one is, septium or something, which elements are suitable for money, and it kept narrowing it down, and eventually it came to gold, silver, and platinum. And the only reason that platinum is not a money historically is because until maybe 200-300 years ago, there wasn't we didn't have the technology to mint it, to melt it down. You need a really high blast furnace for that, or however they do it. I don't know. Gold and silver have a lower melting point, so it's possible to mint them with more crude technology. But now that we do have the technology to mint platinum, there is a chance that it could enter monetary circulation, especially if gold goes through the roof and there's a discount on platinum, which there has been for a long time now. So you could start seeing platinum become more of a monetary reserve than it has been historically in the past.
Yeah, we got a question here from Dmitry Shmerkovich. He's asked about platinum, so that's been answered. But what about your thoughts on the Russian economy? So you said it's going to benefit. You just said that you think it will do well investing in Russia.
I think
emerging markets.
Yeah, I think it'll do well if the dollar crashes, but there's always that political danger. Yeah, I don't really know what's going on there politically. I don't know what happens if Putin gets mad, who takes over. It's a big question mark.
Okay, we're getting more questions. What is, in your opinion, the best commodities ETF to go long of? Do you know any?
Yeah, I wouldn't call it the best, but I would call it the least dangerous. Would probably be OUNZ. It was started by
OUNZ.
Okay. OUNZ. It's I think it was started by Axel Merck, who's a gold bug, and then it was taken over by Van Eck. But it is redeemable in physical, at least in theory, to retail investors. So if you need it in a currency crisis, there is a better chance that you'd be able to collect on your gold, not silver. It's a gold ETF.
What about commodities, a general commodity ETF? I think that's what he meant, maybe.
Oh, general commodity ETF. Oh, there's so many.
Yeah, I think the best thing is just to look it up, and you'll find many. Just Google commodity ETFs.
I would look for an independent one that isn't associated with a big bank like Deutsche Bank. Deutsche Bank has one, DBC, but Deutsche Bank is going to go under, no question about it. I don't know what happens to their ETFs when that happens. So I would look for a more independent operator that isn't as connected to the big banks. Do some research on that.
Oh, there's a question here. I'm going to answer this one. Miles, how does the U.S. stop China from draining our commodities and land? How do we get our manufacturing back? Well, that the only way to do that is for the U.S., for the Fed to raise rates, to make, to basically the American economy start living within its means and not exporting debt. Because the reason why China has been able to buy up not just the U.S. but the UK and other countries is because they've been producing a lot, they've been selling loads of stuff, and they've been receiving our currencies, and they have to do something with that. They're running a huge surplus. So the only way to stop that is for America to get back to, I'm not saying Americans are lazy, but I think Donald Trump was trying to do that. Of course, he's been he's lost. He's not there anymore. But first of all, the U.S. needs to start, and I think it's all to do with the Federal Reserve, because the cheaper they keep the dollar, or the borrowing rates, the more people are going to borrow, the more consumption there's going to be. So yeah, I think needs to be a rebalancing of consumption and production in the U.S. And then you start seeing people buying less from China. And the only reason China is buying loads of stuff in the U.S. and buying the commodities because they've actually been producing more than they consume, unfortunately. And it's very simple. I'm sure you get other reasons from the Keynesians, but I think deep down that's what it is. There was another question here from, I think, Aaron Levy. Your view on cryptocurrencies, Rafi?
My view on cryptocurrencies, I'm
Yeah,
not
and
against them.
Bitcoin. Yeah.
I'm not against them, but this is a total mania. If I mean I just sold. I don't hold any Bitcoin BTC, but I did hold Bitcoin SV, which is a fork off of Bitcoin. I just sold it this morning, because I'm buying physical silver instead. I did pretty well with it, but it's not hard to do well with cryptocurrencies. You just buy and then it just goes up 100% a day. I mean, you have all these people who think they're geniuses because they bought cryptocurrencies like a month ago and now wow, they're up so much. But this is the hallmark of a crazy mania, because these things are not money. If you've ever tried to use them to pay for something, it'll give you heart palpitations. Like every time I sell I sell my Bitcoin SV or whatever I hold, I'm like, is it going to go through? Like I have to put all these letters, and then if you're not very tech savvy, you can make a mistake and then lose it, or you can lose your password. I mean, the whole system is just, it's so crazy, and no one's going to use this for transactions. It's not like you take your credit card, you swipe it, you paid, you're done. That's a money.
Yeah.
Bitcoin is not. It's a speculative asset that is just gaining more steam because it's gaining more steam because Elon Musk said he bought $1.5 billion of it, but only came out with that after he bought it, so then he was able to sell it at a profit if he wants to. But there's nothing here long term. This is very dangerous stuff. This is like PCP or
Yeah. There's another question from John H. Would I buy Deutsche Bank puts? I'll answer that one. Yeah, puts are a great way of, especially when you buy puts or calls. I don't recommend people selling calls or puts unless, let's say, if you own a stock and you sell calls just to get the premium, you're covered. But yes, the only problem with puts, and the thing is, with puts, you're not shorting the stock, and you don't get the problem of getting squeezed out. When you buy a put, the only thing you can lose is the premium. But there is a problem of timing, because you buy a put and then it expires, and then a week or a day later, Deutsche Bank starts dumping, and your put was worthless. So yes, I've traded options many times. Of course, when I worked in the city, I was a futures and options broker. Do it, but make sure you have a gut feeling about the timing that you think Deutsche Bank is ready to keel over. And the other warning I would have is that a lot of times when markets get really volatile, like it did last March, brokers sometimes freeze the trading platform. So you could see Deutsche Bank down 20% in a day, and you can't access your account and liquidate your puts.
Well, I'll tell you, Mar. I have a story about that, and you should be very careful of this. Luckily, it turned out okay for me. But what I often do in my trading strategies, and if you subscribe to me, you'll see this, is that if I decide to sell a stock to lock in some profits, but I don't want to miss extra upside, what I'll do is I'll sell my position, and for every 100 shares I sell, I'll buy a slightly out of the money call option on the same stock. So I lock in some profits, and then I protect myself against extra upside. So I did this with one stock, DRD Gold, one of our big holdings in the portfolio. I wouldn't recommend. I don't know if I recommend buying it now because it's so much higher than it used to be. But I bought these call options on it after I sold some of it, and then the stock went crazy. I think to a high of like $17, and I had a $5 call. So I wanted the shares. I almost never exercise options. I just sell them. But I wanted these shares because they pay dividends. So I tried to exercise the options like a day before the day before it expired, and it said error. It wouldn't let me. So I tried calling them. I tried calling my broker, and they're like, "Oh, there's like a 6-hour time waiters." They weren't answering the phone. So the only thing I could do was just sell the options, and which is what I did, and I locked in the profits, thank God. But like this is not there are potential problems here that you have to keep in mind, logistical problems that you could encounter if you are in the middle of a panic or just a busy time.
Yeah. There's another question here, and I'm sure you probably want to answer it. How you're coping with the lockdown? I know it's not been easy.
Well, personally,
I'm getting fed up as well, because here but I'll let you answer. Tell them where you are, because some people might not know where you are.
I'm in the Golan Heights in a city called Katsrin, and I have 5 kids from the ages of 10 to a baby, almost 2. And my 2 of my kids just returned to school today. This was their first day back in school. It's not even really school. It's not like they learn anything there. It's like I just want them to go so they can see other children and pretend that they have like a normal life. But how I'm handling it. My wife and I alternate between bouts of insanity and trying to comfort each other, and we bounce out. Like, thank God, our family is strong, a lot stronger than like weaker families in this town. But it's not easy, and more for myself, I'm worried for my kids and their social lives, and it's difficult, but you band together, you love each other, you tell yourselves that every day, and you meditate if you can to calm your mind. This is what it's going to be like when the currency system collapses, except it's going to be a lot scarier.
Yeah. Do you think someone else with the currency there's a question about whether you think we're going to go back to a silver dollar, or that you're just going to have, silver is just going to be like something that you can barely have. I personally don't see governments trying to get back on sound money. What do you think?
I don't think it's going to happen that way, because I think it's going to be such a mess that there's going to be no central plan to bring it back together. I think there are pockets of silver that exist, and people hoard them, like you and I, and like hopefully many of our followers. And where these pockets of real money exist, that's where the resources are going to go, and from there the monetary supplies are going to circulate. You're going to have an organic system of money, how it started again. It's not going to be a top-down decision, I don't think, because I don't think they have the wherewithal or the ability to do that. I think once the system is going to go, they're going to run somewhere in some kind of cave or something. I don't know where they're going to go, but no one's going to like them. So it's not going to be up to them.
I think as well, we could have a period where people have to barter value for value if they don't have gold or silver. I think that's something people need to think about. Don't you think so, Rafi?
I don't like to think about these things.
Yeah, hopefully it won't happen. But let's take a few more questions. We're almost to the out. Are you all right to keep going a little bit?
Yeah, I got like 5 more minutes. Sure.
Yeah. Question: do you get warrant papers for your stocks? Worth it? How hard is it?
Yeah, I would recommend. It's an easy thing to do. Call your broker, get paper certificates for your stocks in case they go down. Sorry, I'm getting a call here. In case they go down, and your broker, doesn't have records of your electronic records, so you have the certificates. It's not hard to do. Just do it. Call them up and get them.
Yeah. All right. I guess once you have the stock certificates, if you wanted to sell the stock, you have to send it back to the broker, or can
I
you
don't know
just sell it?
exactly.
Yeah, I don't know. I heard a story that back from the 30s, early 30s up until the 60s, because there's such a bad bear market in that period or to the mid 50s, people kept their stock certificates, and some people were only able to get their money back like 25 or 30 years later. So with that, I'm going to show here how you guys can look at Rafi's work on Seeking Alpha. There's 2 ways. The first one here is through he writes, do you write regularly for Australib? Your
Yeah,
articles?
I write usually, I try to do once a week.
So, okay.
Sometimes I can't, but
Yeah.
yeah, around once a week, maybe once every 2 weeks. But
So
I'm
yeah.
gonna step it up.
Yeah, so you can access this for free, these articles, and then I'll show you the other way you can access Rafi's work. Just before we go here, sorry. The other way is the Endgame Investor, and hold on. Yeah, the other way is the Endgame Investor. There is a subscription service. I think is a couple of $100 a year. Is that right, Rafi?
I think it's like 230, something like that.
Yeah, and you get, and can you tell the viewers how, how regularly you write this
Oh, yeah,
report?
yeah, sure. So I write Monday, Tuesday, Wednesday, Thursday. Sorry, Tuesday, Wednesday, Thursday, Sunday. Tuesday,
Yeah.
Wednesday, Thursday is a daily report, and then after Friday, I look at the week in review. I do a monetary analysis of the money supply, balance sheet, charts. We go through technicals, we go through fundamentals, and we go through psychological factors. I try
Okay.
to focus on keeping emotional balance, and it's not just me, really. I mean, my subscriber base is growing, thank God, and I'm finding a lot of useful information from a lot of the subscribers. For some of them are real, hardcore gold bugs that have been in this for 30, 40 years. They check shops in their local neighborhoods, and I get word from the field of what's going on in these shops. So things that I can't get here because there's no shops in the Golan. Nobody invests in precious metals in Israel. So there's a real wealth of information among the subscriber base and myself. And you have a 2-week free trial just to see how it is, no charge, and join us and be part of the community. It helps keep me sane.
Yeah, great. And so thanks again, Rafi, and we'll keep coming back. I think the viewers enjoy having you. And if you don't mind, I mean, I'll contact you, to have a chat.
Yeah, definitely, no problem.
Okay. Have a great day and take care.
Okay, you too. Bye.
Bye. Okay.
All right.
Let's see here. End stream. Okay.